Welcome to my presentation. I am Vinay Kumar C, Assistant Professor, SVSC College, Bandwal. Online classes to second BCom students, SVSC College, Bandwal, Dakshina Kannada. Today's presentation topic is pro forma of Memorandum reconciliation account and practical problems. So this is the chapter comes under as second BCom students of fourth semester. So this is the last chapter under cost accounting. Under this online classes, we are going to discuss the various contents relates to the reconciliation statement. The first one is meaning of reconciliation. Under the reconciliation, we are all familiar with cost accounts and financial accounts. They are separately maintained in two different set of books, that is the profit and loss shown by one may not be agree with that shown by other. Due to the several reasons, whatever we are prepared, the accounts relates to the cost is completely different from the financial accounts. So that is the main reason we go for reconciliation periodically. So need for reconciliation. The first one is it reveals the reasons for difference in profit and loss between cost and financial accounts. I told that we are getting the profit or loss in the accounts, various accounts relates to the cost or maybe the financial, it is completely different. Under the financial accounts, we are going to take only the financial items, but in cost account, we are incurs the several cost and several revenues relates to each and every unit of the products and services. So that's why the profit and loss is completely different from cost accounts to financial account. Second one, it ensures no income or expenditure item has been omitted to record and there is no under or over recovery of overheads. So this is the procedure whatever we are using under the accounts. So the item may be omitted. So we are going to add that information in a separate statement called a reconciliation statement. So that's why it is very necessary to have a reconciliation statement to have a proper profit and loss towards the accounts. There are numbers. It also facilitates the internal control by highlighting the way variation causing increases or decreases in profit. So this is another reason we go for reconciliation statement. So what about the procedure? Is it any procedure here we are following under this reconciliation statement? Yes. The cost and financial accounts are reconciled by preparing reconciliation statement or the memorandum of reconciliation account. So we are having some procedures under the reconciliation. The first one is reconciliation statement. Here we are going to have some information towards some item should be added or some item should be deducted. Okay, so one may be start with the profit shown by one set of accounts as a base of profit, and items which do not tally are either added or deducted from it to get the profit shown by other set. So this is the pro forma which is used under the reconciliation statement. I already told that under this pro forma we are having profit as per the cost accounts. So we are know about this profit. Profit is always a nominal account, it comes under a credit side. That's why we are putting the amount under the credit column, profit as per cost account. This is given in the problem. If the loss given in the cost account, that should be shown on the debit side. Okay, so and then you should add the other information. So that is the pro forma tolls over absorption of overheads in cost accounts. So we are going to take the over absorption items should be added. Similarly, financial incomes not recorded in cost accounts. So based on cost information, we are preparing the reconciliation statements. So if you are forgotten or if you are omitted the financial incomes, that should be added. Similarly, under valuation of closing stock in cost account or valuation of opening stock, item charges only in cost account, this information should be added. In the less column, we should shown the under absorption of overheads in cost accounts, financial charges not considered in cost accounts, under valuation of opening stock in cost accounts, over valuation of closing stock in cost account should be shown on the less column. Okay, finally we arrive at profit as per financial accounts. So next move on to the problem relates to the reconciliation statement. So this is a problem given. From the following data, prepare reconciliation statement to find out the profit as per financial accounts. So as per the pro forma, we get some information like profit as per cost accounts. Okay, this should be shown on the credit side of the reconciliation statement. Similarly, they are also given works overheads over absorbed is rupees 20,000, administration overheads under absorbed 45,000, under valuation of opening stock in cost account 15,000, bad debts written off during the year 14,000, preliminary expenses written off during the year 10,000. So this is the problem given. So next move on to the solution. So take down the information. Profit as per the cost account should be on the credit side. So we should add over absorbed items, that is over absorbed works overhead in cost account is rupees 20,000 should be added. We arrive at 2,70,000, and then we deduct some information relates to under absorbed administration overhead in cost accounts, under valuation of opening stock in cost account, that is 45,000 and 15,000. Similarly, items not charged in cost accounts, so that is some financial items we are not considered in cost accounts. Okay, that amount should be deducted. That is bad debts written off, it's 14,000, preliminary expenses written off is rupees 10,000. So these are the two items that comes under the financial accounts. So finally, profit as per financial account is 1,86,000. So next move on to the another problem. Similar problem relates to the reconciliation statement. Here also we are having under this problem the profit as per the cost account is 1,45,500. Also here some information relates to work overhead under recovered, administration overhead under recovered, selling overheads over recovered. So that is 1,45,500, 9,500, 22,750, 19,500. Next, over valuation of opening stock, over valuation of closing stock, interest earned during the year, rent received during the year, bad debts written off during the year, preliminary expenses. So these are the some items they are given in the problem. So here also we are getting some solutions. Profit, that is 1,45,000, 45,500 on the right hand side. Similarly, we are add some information that is based on the pro forma over recovered items of selling overhead, over valuation of opening stock, interest earned excluded in cost account, rent received excluded in cost accounts. So that those items are we are added under the add column. Similarly, we deduct the some information relates to under recovery of work overheads, under recovery of administration overheads, overvaluation of closing stock in cost accounts, items not charged in cost accounts. So that is 9,500, 22,750, 7,500, and also the some financialized items we are not considered, that item also we are deducting 9,000 and 18,000. Finally, the profit is 1,44,000. So reconciliation statement, it is always necessary for all the type of companies, because we are having a separate procedures in cost accounting and as well as the financial accounting. So both are different accounts, they are the part of the accounting. So each and every accounting, the result will be different. So cost accounting profit may be the 15,000, financial accounting profit may be the 16,000. What is the reason why the 1,000 rupees is difference? Okay, that is the reason we required a reconciliation statement. So anyway, we are familiar, we are understood what is reconciliation, and also we are discussed the meaning of reconciliation, need for reconciliation, and procedure of reconciliation, and again we are discussed the pro forma, and finally we done the two problems related to the reconciliation statement. So thank you for watching.